In retrospect, it seemed inevitable, I suppose. Gold has hit $3,000. It all seems so obvious in hindsight, doesn't it? Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. Let's take a look here. As it stands, gold is trading at $3,029.60 per ounce. That is on CNBC. I believe that is the futures price. Nevertheless, we have officially hit $3,000. We have a story in the Northern Miner. This was March 14th, so on Friday. This is by a staff writer at the Northern Miner. Gold made history on Friday by reaching the $3,000 per ounce level for the first time, as investors continue to pile into safe haven metal to seek cover from economic uncertainty sparked by U.S. President Donald Trump's tariffs. So let's see all the reasons that are going to be given here. So we have the tariffs as reason number one. Again, I have to laugh. I think to myself of that earlier episode, it's sort of like the more I pay attention to markets, the more impressed I am with technical analysis. It felt like it needed to hit $3,000, and now we're going to need a pullback so it can reconsolidate the $3,000 psychological level and then burst through $3,000 and then check support and then lift off to the sky. I guess we'll see what happens. What else does it say here? In the last 25 years, bullion has risen tenfold, outperforming even the S&P 500, which quadrupled over the same period. Isn't that fascinating? Because as someone that's been paying attention, say, since about 2009, it basically seemed like the S&P was just on a relentless climb and that it was always going up, whereas gold always seemed to be kind of struggling, lounging around, and trying to decide what it wanted to do and being boring. So it's quite interesting. I mean, I guess it's only been up, let's call it threefold since, 2010, 2011, when I think we hit around 1,050. So now predictions for the future. Bank of America analysts led by Michael Widmer said in a note earlier this week, quote, for it to hit $3,500, investment demand would need to rise 10%. That's a lot, but not impossible, end quote. Before that, Goldman Sachs had already raised its gold price forecast to $3,100 by the end of 2025. So sentiment seems to be quite strong. Turning to another story on this landmark level here, this by a staff writer at mining.com. UBS Group lifts gold price target to $3,200. And this is on demand for safe haven assets and global trade conflicts. And UBS also said gold, quote, will also benefit from a worsening outlook for the U.S. economy, with traders now pricing in additional interest rate cuts by the Federal Reserve as concerns about a recession rise, end quote. It's quite interesting. It doesn't get discussed that much. As you see the Chinese stock market start to get a little bit of momentum, and the U.S. stock market starting to lose a little bit of momentum, I mean, the question at the back of, I'm sure, a lot of people's minds is there a rotation from U.S. to Chinese stocks? And within that, of course, you don't want to put necessarily everything in. Maybe you diversify to gold. Interesting question. Let's continue. One more story here. Gold price to reach $4,000 on central bank demand. Double Line's Gundlach says. So Jeffrey Gundlach, CEO and founder of Tampa-based Double Line, which has about $93 billion under management, told investors during a conference call last week that he believes the yellow metal could eventually reach $4,000 per ounce. The main reason, he noted, is the, quote, very sharp, steep trajectory, end quote, at which central banks around the world are buying bullion. Central banks are considered a major source of gold demand and hence an important factor underpinning prices. According to data compiled by the World Gold Council, they have bought more than 1,000 tons of the metal for 3 consecutive years and are expected to remain active in 2025. Gundlach, known as the Bond King for his success and expertise in fixed income investing, pointed out that gold has continued on a bull market for a couple of years now, ever since it went down to $1,800 an ounce. As for his bold price forecast, the Double Line CEO said, quote, gold will make it to $4,000. I'm not sure that'll happen this year, but I feel like that's the measured move anticipated by the long consolidation at around $1,800 on gold, end quote. So interesting. Sounds like a technical conclusion, doesn't it? That's the measured move anticipated by the long consolidation at around $1,800 on gold. I mean, we're back to technicals. And here it's the Bond King talking about the technicals. So I just kind of shake my head here. For all the reasons that are given, It's just, human psychology and perhaps even irrational elements that are driving this force higher, which is kind of interesting. By measured move, the fund manager refers to a technical analysis concept where the price of an asset moves in a predictable way based on past trends. The long consolidation means that gold stayed around $1,800 per ounce for a long time, building a strong base before breaking higher. The base gives gold the potential to continue rising towards $4,000 as part of a natural price movement. And finally, while Gundlach's prediction may be too far ahead, less ambitious forecasts could still be attainable this year. Analysts at Macquarie, led by Marcus Garvey, last week updated their price outlook and are now expecting gold to reach $3,500 an ounce as soon as the third quarter. And we've had kind of a relentless climb if you look at the chart of gold, and so sentiment seems to be quite positive. You put on your Nostradamus cap and you kind of think to yourself, maybe it's time for a pullback. Let's continue. So, more action in the Congo. So the M23, who are the rebels in the Eastern Democratic Republic of Congo, were going to meet with the Congo for peace talks in Angola. But before they did, the EU put sanctions on Rwandan officials who are thought to back the M23. And then the M23 backed out as a result. So here's the story. This is courtesy of AP and Reuters via Deutsche Welle, or DW.com. M23 rebels withdraw from Congo peace talks. M23 rebels said they were pulling out of talks with the government of the Democratic Republic of Congo because EU sanctions against Rwandan officials earlier in the day undermined negotiations. The M23 rebels had planned direct negotiations with the government of the DRC to end the conflict in the country's east. Now, this is news to me because what I had been reading here earlier is that the DRC, the Democratic Republic of Congo government, didn't want to basically legitimize the M23 by negotiating with them. Now it sounds like they were willing to do it, and then the M23 backed off. Let's continue. But the Congo River Alliance of rebel groups, which includes the M23 group, said it was pulling out of talks because of sanctions imposed by the EU earlier in the day against M23 and Rwandan officials. The rebel group coalition said in a statement that the EU actions were aimed at, quote, obstructing the much-anticipated talks, end quote. Rwanda also said earlier in the day that it was cutting diplomatic ties with its former colonial ruler, Belgium, with Kigali accusing Brussels of attempting to, quote, sustain its neo-colonial delusions, end quote. Quite interesting because the DRC has accused the EU of basically being neo-colonial when they signed the MOU last year with Rwanda for critical minerals, and now Rwanda itself is saying the EU is harboring, quote, neo-colonial delusions. Quite interesting. Finally, Congolese President Félix Tshisekedi had previously refused direct talks with the M23 rebels that have fought the government for more than a decade. But Tshisekedi announced last week he was ready to meet with the M23 group after a meeting with his Angolan counterpart, who has acted as a mediator in the conflict. Tina Salama, a spokesperson for Tshisekedi, said after the M23's withdrawal that the government delegation would travel to Luanda anyway. The M23 escalated its fight earlier in the year. Despite assertions by the US and UN experts, Rwanda has denied supporting the rebels. M23 is one of about 100 armed groups that have been vying for a foothold in mineral-rich eastern Congo near the border with Rwanda. The rebel group seized two big cities in eastern Congo since fighting escalated this year. The fighting has killed thousands and displaced hundreds of thousands since the beginning of the year. Meanwhile, we got a story from Reuters yesterday, and this is Reuters via mining.com. Congo president meets U.S. lawmaker amid talk of mineral deal. Democratic Republic of Congo's President Félix Tshisekedi has met U.S. lawmaker Ronnie Jackson to discuss fighting in the east of the country and opportunities for U.S. investment, Congo's presidency said. The meeting took place 1 week after Washington said it was open to exploring critical minerals partnerships with Congo. A Congolese lawmaker in February contacted U.S. officials to pitch a minerals for security deal. A presidency statement described Jackson as a special envoy for U.S. President Donald Trump. Tshisekedi faces an insurgency by Rwandan-backed M23 rebels in East Congo, and his government plans to send a delegation to peace talks in Angola on Tuesday. Congo has vast reserves of cobalt, lithium, and uranium, among other minerals. There was no direct mention of minerals in Sunday's statement, and here's a quote from Representative Ronnie Jackson. Quote, "We want to work so that American companies can come and invest and work in the DRC. And to do that, we have to make sure there is a peaceful environment. End quote. Jackson was quoted as saying in the statement. Finally, Byron Cabral, senior Africa analyst at Dragonfly, said last week it would be a struggle to entice U.S. mining companies to invest in Congo due to poor infrastructure, insecurity, corruption, and the dominance of Chinese firms. And also in Congo, and don't forget, I don't even have a story here on this, but don't forget we have the cobalt export ban, and cobalt prices are now, I believe, at $16. Let me quickly look here. Cobalt is now trading at $16.40 for the refined cobalt, and I believe I saw the earlier form of cobalt that DRC exports, I believe, is around $10, and last week I believe it was around $7.40. So, all quite interesting. Now, what else is happening is tin prices are at a 2-year high as Congo mine halts. So there's a lot of resources in Congo, in a sense. To a certain degree, you could say Congo is up for grabs right now. Like, China has done a lot of investment there. They have CMOC, who of course is mining copper and cobalt, but you also have the U.S. potentially in there because perhaps China doesn't want to get involved militarily in Congo as well. So tin prices hit 2-year high as Congo mine halts. This is Colin McClelland at the Northern Miner. Tin prices surged to the highest level in more than 2 years after Alphamin Resources suspended its busy mine because rebels in the DRC threatened the area. Tin, used to coat containers and solder circuits, climbed to as much as $37,100 per ton on the London Metal Exchange, its highest since June 2022, before paring gains to $36,280 per ton. This follows a 7.4% surge on Thursday. In Shanghai, tin futures hit their daily 10% limit. And here's a quote from BMO Capital Markets, who said in a note on Friday, quote, "This comes at a time of relatively low LME tin stocks, with LME on-warrant stocks totaling 3,500 tons on Thursday, down by 27% from 4,800 tons at the end of 2024, end quote. So we're also seeing copper, knock on the door of $5. So it seems like metals are starting to catch a little bit of a bid here, with gold leading the charge. It continues. Alphamin stock rose by 22% by early Friday afternoon to 56 cents apiece, giving the company a market capitalization of $719 million Canadian. Finally, Alphamin Resources announced it would temporarily cease operations at the mine due to unrest in North Kivu province. The Rwanda-backed M23 rebel group has recently advanced westward toward the mine's location, occupying the town of Nyabiondo on March 9th. 3 days later, rebels took control of Kasheberi, 13 kilometers further west. Political turmoil in the DRC is compounding the impact of a halt to mining in Myanmar's Wa state, helping to lift LME tin prices by about 25% so far this year. So it continues over in Congo. Now, another interesting headline from the Africa report, we've been discussing the Libido Corridor and how American money, particularly through U.S. aid, that was going to help fund the Libido Corridor, this railway from Zambia to pass through the Democratic Republic of Congo to the western coast of Africa to Libido in Angola, that this railway, which the Biden administration was one of their hallmark achievements by the end of the term, the way it was being presented, with Joe Biden even going to Angola to celebrate the beginning of construction of this railway. U.S. aid was financing that, and of course, U.S. aid has been cut from the U.S. government with President Donald Trump. And then, so to bring you up to date, the EU has recommitted and restated its desire to build this railway. And then late last week, we got a headline from the Africa Report, who breaks many stories in Africa and is outstanding, theafricareport.com. Angola pushes ahead with key corridor. With or without U.S. aid, Libido is happening. And as it says here, despite U.S. funding uncertainty, officials say the strategic rail and road project from DRC to Angola's Atlantic coast will forge ahead. And it continues, regardless of concerns over reduced U.S. development funding, underscoring the route's value in linking Central Africa's mineral belt to the Atlantic coast. And with Felix Tshisekedi going to Angola to discuss the M23, one wonders if they're also going to discuss the Libido Corridor. So all of these overlapping narratives, and again, Congo right at the center of it, and I don't even have a story here on the cobalt. which is up more than 50%. So quite interesting. Continuing on, the corporate battle at Korea Zinc, of course, as I've been discussing here on the program, the world's largest producer of refined zinc, they are having a corporate battle, and so a very strategic processing facility who also produces metals like antimony and other critical minerals. Here we have a new update. Korea Zinc hits a wall as it aims to register technologies as NCT. And what NCT stands for is National Core Technology. So it seems to me the people that are running Korea Zinc who are concerned that it's going to be taken over by private equity are now using the National Core Technology argument to prevent this. NCT refers to industrial technologies designated under Article 9 of the Act on Prevention of Divulgence and Protection of Industrial Technology as those that are likely to have a serious adverse effect on the national security and the development of the national economy if leaked abroad. And this is courtesy of Pulse, a Korean news website. It continues, this is due to their high technological and economic values in domestic as well as overseas markets, alongside the related industry's high potential growth. It continues, as the leakage of national core technologies abroad could pose substantial risks to national security and economic stability, any attempt to sell them overseas requires approval from the Ministry of Trade and Industry and Energy. Korea Zinc applied to designate its two technologies as NCT in November 2024, including its smelting process for antimony. Youngpoong, a large shareholder in Korea Zinc that is engaged in a legal takeover dispute with the zinc producer, submitted a written objection to the Trade Ministry against the designation. It claims the objection is purely technical and denies any intent to block Korea Zinc's application on purpose. Finally, a specialized committee of 10 academic experts under the ministry is expected to reach a conclusion on the matter as early as the end of March 2025. The ministry will make its final determination based on the committee's conclusions. So, very interesting. And finally, just a few headlines. China unveils first homegrown space mining robot. This is the Global Times. China's first space mining robot has been developed by the China University of Mining and Technology. It not only adapts to the microgravity conditions of space, but also navigates the rugged, cratered terrains of asteroids, CCTV News reported on Sunday. The prototype has now filed patents with relevant authorities and successfully cleared preliminary reviews, the report said. And we have a quote from Professor Liu Jinhua from the China University of Mining and Technology, who said, quote, in simulated lunar soil environments, the robot can walk, anchor, and even collect samples, end quote. So very interesting development in space mining from China. Another development, this is in the deep sea. Another tiny Pacific nation courts China for deep sea mining riches. With a seabed rich in cobalt, nickel, and copper, Kiribati is seeking new partners after a previous deal with a Canadian company fell through. So another one of these small island nations in the Pacific is looking to partner with China on deep sea mining, which is quite interesting. So an exciting show for you today. I interview Ontario Mining Association President Priya Tandon on the situation of mining in Ontario and the production of metals, and of course, the tariffs and how this is impacting industry in Ontario, as well as some of the bigger challenges that mining in Canada faces beyond the tariffs. So very interesting interview with Priya Tandon. And also on this week's Spotlight, we have Aurania Resources President and Chairman Keith Barron on the program to discuss the company's super interesting projects in Ecuador and in France, where you're starting to see more and more buzz developing critical minerals, quite interestingly. So Keith Barron on gold and copper projects in Ecuador, as well as high-grade nickel in Corsica, and also gold in Brittany. So a very interesting show for you today. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Keith Barron, Aurania President and Chairman, for this week's Spotlight. Joining us today, I'm very pleased to welcome back to the Northern Miner Podcast, Keith Barron, founder and CEO of Aurania Resources. Keith, welcome to the show.
Thanks for having me. Pleasure.
The pleasure is mine, Keith. I mean, I'm always excited to talk to you, almost as much for historical reasons as anything else. I mean, you have a bit of what I consider to be a bit of a unique project. For those that aren't familiar with Aurania Resources and what you're working on, tell us about the company and its unique history.
Okay, well, Irania's flagship project is in Ecuador, down near the Peruvian border. We've been working on this property for about 8 years now. We've spent actually 60 million US dollars in exploration on the ground. When we walked onto the project back in 2016, it was essentially an open book. Nobody had done any previous work here since the time of the Spanish conquistadors, and we found evidence of that in some documents, actually going right back to the manuscript library at the Vatican, a manuscript from 1628, which talked about the area. Our original premise in starting this was to look for some actual lost gold settlements of the conquistadors. One of them in particular called Logroño de los Caballeros, which was the richest place in the Spanish Empire for about 35 years. We did manage to finally locate it. It is not on our property, but our property feeds into the drainages that run through the area. It's an alluvial play, an alluvial area. And still, there's a lot of gold there, but unfortunately, we don't own it. We're not really interested in alluvials anyway. We're chasing hard rock. And all the work that we've done over these years, we've located a massive number of different targets. We have porphyry copper, we have copper, silver, and sediments. First time it's ever been seen in Ecuador. We have lead, zinc, silver, high-grade silver in limestones, and we have your typical epithermal type gold silver targets, very similar in many ways to the thing that my former company found in 2006, which was Fruta del Norte. And Fruta del Norte, your listeners probably aware, is about to produce 550,000 ounces of gold over the next year. It's owned by London Gold. Anyway, that was a hell of a success. The share price went from 30 cents to $43, and I was the largest shareholder on the takeout. So I've actually returned to Ecuador. I've been putting my money where my mouth is and participating in every private placement that the company's had since being in Ecuador. And I own 43% of this company. That's very, very unusual. I do not take a salary. So I'm very much aligned with the shareholders. If the shareholders don't make any money, I don't make any money. And I intend to make money on this thing because we have so many targets in Ecuador. In fact, it's to the stage now where we've kind of taken it as far as we can. It needs a lot of drilling on the different targets. So we have been talking with a lot of senior people in the industry and looking for joint ventures. I think we're making some solid headway there. Let's see what the future brings. But in any case, that's what we're doing in Ecuador. We've just finished an IP survey on one of the gold targets, and I published the results in a press release. It was a little bit esoteric for most of the shareholders, but they didn't really realize it wasn't designed for them. It was designed really to provide bait for the majors, for somebody who actually knows something about geophysics to look at the information and say, gosh, these guys have got a beautiful target there. Anyway, so that's the situation in Ecuador. Now, a couple of opportunities kind of fell out of the sky, so we pivoted a little bit about a year and a half ago and applied for 3 projects in France. 2 of the projects are gold and polymetallics, including antimony, and a very, very interesting project for nickel in Corsica. And this is very odd. It's actually a synthetic beach made out of waste from an asbestos mine. And there are black sand placers on the top of this beach that run 6% nickel right on the surface. And that is certainly something that's very, very attractive. It has cobalt with it. It has a bit of copper and some PGEs. Very, very intriguing thing, but something that the whole industry missed. So we're looking at this thing. We've applied with the government to do an extraction license. It would essentially be for sand and gravel. It's loose material. It's on a beach. We're only interested in the stuff that's smaller than 1 millimeter. That's what contains the nickel. And we would leave everything else behind. And so the beaches would very much survive. So that's a very odd thing. But I'm not married to any specific commodity, though I do love gold. And last week I was walking around the PDAC, not too much though, because I didn't want to get ripped off, but I was walking around with a piece of gold worth about $60,000 Canadian. It's a quartz vein that runs 46% gold. And that comes from one of the areas that we've applied for concessions in Brittany in northern France. Stay tuned to that. I think it's going to be very interesting. I'm hoping that we get all the permits and everything pretty soon. And I think the timing would just be remarkable on this thing, given the price of gold. And I really do believe it's going to shoot through 2,900 and then 3,000. So we will be in the right place at the right time. Of course, we're chasing other metals there, tin, tungsten, antimony as well. And of course, antimony has had a real boost. So we're kind of firing on all different fronts here. We will have a lot of news out, we think, in the next 6 months. And in Corsica, we've been able to synthesize battery grade nickel sulfate from the material off the beach. Battery grade nickel sulfate, that's with SGS Labs here in Canada at Lakefield. So we wanted to show proof of concept that could be done. And now we're looking for someone potentially that would do an offtake with us. Maybe one of the car companies, maybe even Elon Musk, who knows?
Well, it sounds like you have a lot going on. And of course, Fruta del Norte was one of the great finds there. And it's kind of interesting. There were some issues in Ecuador, but it sounds like, with Lundin there, it sounds like Ecuador's, turned the corner, so to speak, and has become fairly encouraging towards mining. All to say, how are you finding Ecuador? Like, have you engaged with the community? Have you engaged in the permitting process? So what's it like working in Ecuador?
It's actually improved immensely over time that we've been there. Of course, I've been involved for more than 2 decades in Ecuador. However, we have signed 2 cooperative agreements with the indigenous communities in our area, and that essentially covers all of our property. And also, in addition, I established 6 years ago a charity. It's called the Step Forward Charity. It's registered in Ecuador, and we do a lot of things for the communities. If we were using company money given to us by shareholders, we want that to go into the ground and exploration. This comes from other funds, especially from my hip pocket. And so we do clean water projects, education projects, small business enterprises, all kinds of different things. And that has really, really improved our standing with the community. I'm very proud to say that we have had no skirmishes. We've had no trouble. We have a lot of friends. Every time I go to one of the communities, I give a speech in my bad Spanish, and we have a have a bit of a party.
You mentioned going to the Vatican and looking at manuscripts. How much confirmation, in a sense, did you get when you went out to Ecuador? Like, how good are you feeling about this project? You have found samples and whatnot. You said you had a lot of targets. Like, how excited are you, in a sense, about what you have in Ecuador?
Very excited. The proof is what we found on the ground. Lots and lots of sampling, lots of geophysics, some drilling that we've done already in exploratory fashion. We have, probably in excess of 25 targets right now, any one of which could be another Mirador copper porphyry to the south of us that is in operation, or it could be another Fruta del Norte. Either scenario would be extremely wonderful for shareholders, and we have multiple bets here. The land package is 200,000 hectares. That's about 500,000 acres. If you have a very small piece of land, the chances that you're going to make a success there are actually quite limited. But, this is kind of like it's spreading the risk, if you like, through different geological types, scenarios, and different areas of the property. I think that there is a chance here to find multiple mines. We just have to get the investment made and get the holes drilled.
What's your roadmap as you look out here? You have very interesting projects in Europe. It's starting to become a pretty interesting place from a mining perspective. And, the appetite is there. And Ecuador. So what do investors have to look forward to in the coming, 6 months to 2 years?
Well, France has very much embraced critical metals. And in fact, I was asked to speak at a roundtable at the PDAC put on by the French embassy. So they are very, very open to the idea of sustainable mining and starting up a mining business again in France after a hiatus of a number of years. There are a lot of extractive industries active in France, more than 1,000 quarries, stone quarries, gravel pits, all that kind of stuff. But there's nothing in terms of what we would consider to be conventional mining, not at this point anyway. So, that's a real plus. You'll see more and more news coming from those projects. And we got a lot of other irons in the fire, which I really can't talk about right now. But, it's a case of watch and see what we do. As I said, I am the major shareholder of the company, and it is in my best interest to make this thing work. And that's the intention.
Okay, excellent. And just finally, what is your message to investors here as we wrap up and put it all together? Why should investors invest in Aurania Resources?
Well, I would say because it's cheap. It's not at the lowest it's ever been in terms of share price. It's around 40, 50 cents Canadian. But I think it's very, very undervalued for what we have. And, it just needs a bit of a nudge. Any one of these scenarios could change everything overnight, as the same sort of thing that happened with Fruta del Norte. We hit gold in one hole and the whole thing went bananas. We were 30 cents one week, we were $4 the next week, and $16 a week after that. That's what happens. Maybe it's not going to appreciate as fast and quickly as Bitcoin, but these things, when you find gold in the ground, it's a real thing. It's a wonderful project. It has a lot of upside. Essentially, just watch and wait and stay tuned.
Keith Barron, founder and CEO of Aurania Resources, thank you for joining us and sharing all of the very interesting work you're doing in Ecuador and France.
Thank you so much.
And thank you once again to Aurania Resources for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit aurania.com. Turning to the website, copper is starting to turn some heads over here. So we have a few stories on it. Copper price nears 5-month high as China moves to boost consumption. And this is an interesting situation here. There is the sense that China is easing while the U.S. is drawing back spending. So, interesting dynamic here. This is by a staff writer at mining.com. Copper prices traded near a 5-month high on Monday after the Chinese government vowed to revive consumption. Chinese authorities unveiled a special action plan over the weekend aimed at boosting spending by increasing incomes. Consumption in the country grew faster at the start of the year, helping offset the impact of U.S. President Donald Trump's tariffs, which are putting pressure on Chinese exporters. Retail sales increased by 4% in the first 2 months, exceeding forecasts. However, demand from China's property sector, a pillar of metals demand, has yet to bottom out. Chinese new home prices fell at a quicker pace last month. On Monday morning, copper for May delivery was trading 1% higher at $4.95 per pound, or $9,900 per ton, on the COMEX market in New York. Copper prices have risen around 12% this year after President Donald Trump signed an executive order initiating a Section 232 review of copper imports. These investigations assess the impact of imports on national security. In addition, the copper market is grappling with a mine supply shortfall. Last week, top supplier Codelco warned that production this quarter will be similar to or slightly below year-ago levels due to maintenance work at its El Teniente underground operation in central Chile. The country, the world's largest copper producer, saw its output decline by 24% month-over-month in January, marking a 9-month low. Citigroup said it expects LME copper to hit $10,000 per ton in the next 3 months as the global market remains tight. Morgan Stanley also anticipates further gains in copper prices amid expectations of potential U.S. tariffs. Very interesting story there. That came out yesterday on mining.com. Also in the copper market, this came out last week on March 12th. This is Bloomberg News via mining.com. China moves for higher copper exports amid market upheaval. China has issued more licenses allowing copper smelters to export metal tax-free, aiding local producers and paving the way for greater overseas sales at a time of upheaval in the global market. China Copper Southeast Copper Company, a unit of Aluminum Corporation of China, has been granted approval to do the so-called tolling trade, the company said in a statement. Separately, privately owned Guangxi Nangguo Copper has also been given permission, Shanghai's metals market reported, without citing anyone. The global copper market is facing significant disruptions at present, with the metal benchmark price hitting a 4-month high in London on Wednesday. In China, the largest refined copper supplier, local smelters have been battling to secure scarce supplies of ore, undermining their profitability, with processing fees in the industry collapsing to a record low earlier this year. In the U.S., meanwhile, President Donald Trump's signals that copper imports may soon be tariffed have lifted U.S. prices far above comparable global rates on the London Metal Exchange. That divergence has drawn stockpiles away from Asia as arbitrage traders seek to profit from dislocations. The administration followed through Wednesday with levies on aluminum and steel. 2 major Chinese smelters plan to ship as much as 45,000 tons for March delivery into bonded warehouses and Asian depots in the LME's network, according to people with knowledge of the trades who asked not to be named. The volume would be in addition to their planned annual sales. The licensing issuances mean that more than a dozen of major Chinese smelters have now been approved for the tolling trade, which involves exporting refined copper that's been made from imported ore with tax exemptions. So interesting mechanics in the copper market there. Another kind of side story, but you kind of wonder if it's related. Indonesia to issue Freeport Indonesia 6-month permit to export copper concentrate. This is Reuters via mining.com. Indonesia will issue Freeport Indonesia a 6-month permit to export copper concentrate while its smelter is repaired, which will also ensure the government continues to receive royalty payments, the energy minister said on Monday. Freeport has been seeking the permit after it was forced to stop copper cathode production at its new smelter in Gresik in East Java province after a fire damaged the plant last October. Quote, "We are giving 6 months so that they can expeditiously fix the smelter so that Indonesia can get state revenues from the royalties," end quote, Energy Minister Belil Lahadalia said. And finally, on the copper front, Southern Copper says 20 injured in attack at Peru mining project. And this is Bloomberg News via mining.com. A group of informal miners attacked facilities at an exploration project in southern Peru, injuring 20 workers and security guards, an official at Southern Copper Corporation said Monday. Images circulated in social media showed the Las Chanzas mining camp in flames, reminiscent of a 2022 incident in which the camp was burnt down. The New York-listed firm said it was preparing to release a statement. Authorities are investigating, the company official said in text messages. So, continuing on, Rusal to buy 50% stake in Indian alumina refinery owner in stages. Interesting story. This is Reuters via mining.com. Russian aluminum giant Rusal on Friday said it had agreed to buy a 26% stake in an Indian alumina refinery owner for $244 million and to acquire up to 50% in stages, a move that should reduce its reliance on third-party raw materials. So more partnering up by Russia and India on commodities. Continuing on, Bolivia's lithium deals with China, Russia in limbo. This is Cecilia Jamasmi on northernminer.com. Bolivia is facing mounting public backlash over contracts signed with Chinese and Russian companies late last year to exploit its vast lithium reserves, with community groups arguing the agreements offer no real benefits to locals. The controversy led the Bolivian Chamber of Deputies to suspend parliamentary discussions on the deals in February, pending, quote, "a thorough information-sharing process with civil society is completed," end quote. The contracts, worth roughly $2 billion, include a $970 million deal signed last September with Russia's Uranium One Group and a $1 billion agreement with Chinese firms CBC and CITIC Guoan Group. Both aim to build lithium processing plants capable of producing tens of thousands of tons per year. Finally, President Luis Arce has accused lawmakers of deliberately obstructing these and other key investments as part of a broader political strategy against his administration. He warned that if the deals are not approved this year, Bolivia could face a decade-long delay in lithium production. If the country waits too long, until 2035 or 2040, lithium, quote, "will be history," end quote, replaced by other clean energy sources like green hydrogen, he told Russian state media Sputnik earlier this week. Interesting perspective. Continuing on, Russia plans to launch large-scale lithium production in 2030. This is Reuters via mining.com. Russia plans to produce at least 60,000 metric tons of lithium carbonate in 2030, the Natural Resources Ministry said on Monday, as Moscow seeks to reduce its dependency on imports and boost production of high-capacity electric batteries. Quote, industrial lithium production in the country will begin in 2030, end quote, the ministry said. President Vladimir Putin said last month that Russia should speed up its plans to mine lithium deposits. Demand for lithium has surged in recent years as Russian companies work on the mass production of lithium batteries and electric vehicles. And the ministry continued, quote, the country has traditionally imported lithium, and it is now crucial to launch facilities swiftly and increase the extraction and processing of this strategically important resource for the economy, end quote. And just a few headlines here. U.S. agency slashes estimate of Vietnam's rare earth reserves in major revision. This is Reuters via mining.com, and wait till you hear this. The U.S. Geological Survey has significantly revised down its estimate of Vietnam's rare earth reserves to 3.5 million metric tons from 22 million tons, a change that, if verified, could affect the country's ambitions to be a rare earths powerhouse. So that sounds like almost 90%, revised down from 22 million tons to 3.5 million tons. So pretty interesting there. Another headline, USA Rare Earth merges with Inflection Point and debuts with NASDAQ listing. This is Amanda Stutt at the Northern Miner. USA Rare Earth went public on Friday as CEO Joshua Ballard and Chairman Mike Blitzer rang the opening bell. Shares in USARE gained 70% in New York to close at $18.55 apiece on its first day, while they slid 25% on Monday to $13.85 as wider markets rose slightly. The company has a market capitalization of around $117 million. Also on rare earths, Japan's JOGMEC Iwatani to invest $120 million in French rare earths project. This is Reuters via mining.com. And as I was saying, we're starting to see a real interest by France to develop natural resources. Another headline, Energy Fuels teams with Korea's POSCO on rare earths. And this is by a staff writer at northernminer.com. Energy Fuels has partnered with South Korea's POSCO with a view of establishing a non-China rare earth elements supply chain for electric vehicles and hybrid EV drivetrains as early as this year. So moving fast over there. And finally, First Quantum to suspend Panama arbitration battle. This is by Frederick Tomesco at the Northern Miner. First Quantum Minerals Panamanian unit says it's asked its lawyers to halt legal proceedings against Panama in a bid to end a 16-month-old feud with the Central American country's government. And we saw a recent story on how much reach out they had been doing with the community and how things had changed over there. So it all seems to be turning a corner, so to speak, in Panama for First Quantum. The announcement comes a day after Panama asked First Quantum to immediately suspend arbitration efforts against the government if the company was serious about negotiating a restart of its shuttered Cobre Panama mine. Panama President Jose Raul Mulino on Thursday authorized the export of stockpiled copper concentrates from Cobre Panama while approving a restart of the mine's power plant. First Quantum will need to reimburse Panama because the raw materials will be processed abroad, he said. Quote, we have listened carefully to the statements of the President of the Republic, Jose Raul Mulino, regarding the authorization to restart the power plant and export copper concentrate. End quote, Cobre Panama General Manager Manuel Izpurua said Friday in a letter posted on social media. It continued, quote, these actions provide immediate stability for the well-being of the country. They preserve jobs, ensure responsible site management, and safeguard the environment. With these measures in place, we now move to the next step. We have instructed our lawyers to meet with the government's legal team to work on suspending the arbitrations, end quote. Finally, such a move is, quote, part of a transparent and constructive process leading to a solution for the benefit of workers, communities, suppliers, and all Panamanians, end quote, Izpurua added. So very interesting developments there. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.32%. That is 0.12% higher on the week. The UK 10-year gilt is also higher at 4.68%. That is up 0.03% on the week. The Italy 10-year bond is yielding 3.89%. That is down 0.03% on the week, but it did bump up against 3.99, and the German 10-year Bund is yielding 2.85%. That is down 0.01% on the week. And the Japanese 10-year bond is unchanged at 1.51%. Turning to precious metals, gold is trading at $3,032.20 per ounce. That is $119 higher than last week. Silver is trading at $34.73 per ounce. That is up $1.95 on the week. So big move in silver. Platinum is back above $1,000 at $1,022.40 per ounce. That is $62 higher than last week. And palladium is trading at $959.50 per ounce. That is $26 higher than last week. Turning to industrial metals, copper is trading at $4.95 per pound. That is 33 cents higher than last week. Iron ore is trading at $102.85 per metric ton. That is $1 higher than last week. Aluminum is unchanged at $1.22 per pound. Lead is trading at 94 cents per pound. That is a penny higher on the week. And nickel is slightly lower at $7.43 per pound. That is 2 cents lower than last week. Tin is trading at $16 even. That is $1.22 higher than last week. So big move in tin, likely because of the Congo. Huge move in cobalt. Cobalt is trading at $16.40 per pound. That is $4.50 higher than last week. And we're talking like maybe a 40% move from last week's price. Lithium is trading at $10.36 per kilogram. That is 2 cents higher than last week. Uranium is trading at $63.80 per pound. That is 15 cents higher than last week, so barely higher on uranium. And zinc is trading at $1.34 per pound. That is 5 cents higher than last week. Zooming out, cobalt stealing the show, of course, on the export restrictions out of the DRC. Tin not far behind, big move and hitting $16 for the first time in quite a while on the prices that we register here. And also gold, of course, hitting a new record, and copper knocking on $5. Silver also performing quite well. So metals catching a bid, and those are your metal prices. Coming up, I'm very pleased to welcome Ontario Mining Association President Priya Tandon to this week's show. We discuss the tariffs, we discuss mining in Ontario, the big challenges, the shortage of talent, and more. I hope you enjoy the conversation, and I will see you on the other side. Joining us today, I'm very pleased to welcome to the Northern Miner Podcast for the very first time, Priya Tandon, President of the Ontario Mining Association. Priya, welcome to the show.
Hi, thanks for having me, Adrian.
It's great to have you, Priya. It feels topical, actually. Ontario and mining. We see Doug Ford all over the place, global headlines, and, critical minerals at top of list. And I want to get into all that. But for those that are unfamiliar with the Ontario Mining Association, which has been around since 1920, amazingly, yeah. I saw on your website. Can you tell us about OMA and what you guys are up to?
Sure. Well, yeah, we've been around, like you said, for 105 years. Pretty amazing for an industry association in Ontario. We represent the mining industry, and our goal is to bring a cohesive, unified voice on various issues, mostly public policy focused. We tend to, raise challenges, but also innovative ideas and bring that to the table with government and other partners. And overall, our main goal is to improve the competitiveness of the sector and promote safety and environmental stewardship and sustainability. We have about 80 members, many of which are operating mines and with diverse portfolios, whether it's in precious metals, base metals, platinum group metals, or industrials. And we also have members from junior mining companies, supply and services sector, mine contractors, and consulting companies from an engineering or environmental or Indigenous relations perspective. And our board is about 25 folks, senior executives, and including myself, representing many of our operating mines and large mine contractors and mine development and production services.
Okay, excellent. So just to get some kind of a clearer picture here, in a sense, like your day-to-day, What kind of issues is sort of like a typical thing? Will it be you reaching out to miners to give them information about certain things, or is it maybe a miner or even a consultant, approaching you, asking for a list of things, or, what's your typical kind of practical day-to-day?
Sure. I think what I find the most successful in terms of what adds value to us as an association is when we reach out or our members reach out to us and just have a dialogue around what's going on in their day-to-day operations. We try to reach out as much as we can to our various member companies to get a snapshot of what their issues are, what the challenges of the day are, what are some of the successes. Because, Adrian, not sure if you saw this on our website, but we've got 10 committees that make up our association. So various member companies have representation on all of our committees, and they range from committees on energy, innovation, Indigenous relations, health and safety, communications, and the environment. And that's really our bread and butter, I find, is when our member organizations have representatives that give us the real goods, tell us what they're going through, what they're dealing with in all of those subjects. And that helps build our work plan for the year and help set our priorities. But it also gives us that unified voice around what our members are going through and what we can bring to government in the form of innovative solutions.
Right. And I guess that's the other side of this. In a sense, you have your members who you get information from, and then do you put recommendations then to government about, maybe even provincial and perhaps federal, I don't know, on ways of proceeding that are beneficial to, say, miners in the industry?
Yeah, for sure. Federally, we work closely with the Mining Association of Canada so that we can kind of coordinate any submissions or approaches that are being brought to the federal government through them. We're very much focused on Ontario. Submissions are part of the game for sure. Every year, it was a very interesting time for me to join, Adrian. I joined back in October. There was a US election, of course, and then there was an Ontario election and the threat of tariffs, which we are all now getting very familiar with. So typically in an election year, we put together an election planning document, which highlights what our priorities are and what our asks are of all the political parties. But prior to that, we put together quite a robust pre-budget submission. So this year we had done that in February because, as you might recall, budget time is usually March in Ontario, and we were really wanting to get that in before a budget came. So we got that in, and then a couple of days later, the writ dropped and there was a Ontario election called. So we actually had to kind of quickly turn around and make that submission into an election planning document, which we shared with all parties and highlighted some of our, priorities that we're focused on now and some of the requests that we have to government. In addition to that, we do a lot of submissions on various topics. Whenever the government post something on the Environmental Registry of Ontario, for an example, that's relevant to the mining sector, whether it's the Ministry of Mines or Environment or Energy, we work with our members through our committees to put together robust submissions to get into government so that they have our opinions and they have our suggestions.
And you went exactly where I wanted to go here with the massive story, of course, especially in Canada, but really globally on tariffs. I guess my big picture question for you is, how is the tariff discussion impacting your office? I mean, is it dominating the conversation? Are you getting a lot of questions? Like, how is it impacting your business?
Oh, for sure. Getting a lot of questions, not necessarily from our members, though, but getting a lot of questions, whether it's from media or some of our partners. We work, for example, very closely with the Ontario Chamber of Commerce, which is very involved in the tariff discussion. But overall, from our members, we did do a survey when the initial threat of the tariffs came out, and we did a survey of our members around what the impacts could be. And definitely uncertainty is top of mind. Uncertainty is never good for any industry, and it usually translates into higher input costs for them to function as a business. And, recently I saw some reports from some of our member companies, as an example, that are highly integrated with the US in terms of trade, in terms of the supply chain. One of our operations has an autonomous fleet that is almost entirely through Caterpillar, a US company that supplies all of their fleet. So there's clearly the fear there around increased costs and the uncertainty around how that will translate for everyone's operations. I think what our members would all agree on is that we need a measured approach because our supply chains are so integrated, but we really also need to focus on strengthening the sector at home. While we do have those trade relationships with the US, we should look to strengthen those, but also expand and kind of have that growth mindset. What I've generally been talking about, and it was timely because we released an economic report a couple weeks ago at the PDAC conference in Toronto, and it really highlighted our trade numbers with the US, which was really timely, as I mentioned. But Ontario sent $42 billion worth of mineral exports to the US in 2023. So a huge number. And what I really found was interesting in our report as well is the trade balance that we have. While we exported that much, we also imported $40.6 billion worth of minerals and metals from the US. So like almost on par. I know there's billions of dollars in there that translate into surplus and deficits here and there, but to me, it highlighted that, there's no winners in a trade war.
Yeah, very interesting. And I guess it's been a couple of weeks since the tariffs have actually been in place. And I guess there are different ones. There's kind of more of a global tariff, but then it was reduced. I mean, how are you seeing business changing? Like, what are you noticing now that it's been 2 weeks? How much of an impact are you seeing?
Well, specifically on mining, I see our members are hunkering down and focusing on their operations and keeping them going and making them do better. So one of our major asks of government has been to declare mining as a strategic priority. And you mentioned Premier Ford's been really vocal and out there, and it's been great. He's been a huge champion for the province, and in particular on the minerals front, kind of making it clear to the public how much of a priority this sector is to the province and the country as a whole. What we've been asking is to declare it as a strategic priority. He's in some ways done that from a regional perspective. He's declared some regions as a priority, but I really think we need to have the sector as a whole declared as a strategic priority. We need that whole of government approach to mining. There's so many factors involved in the development of a mine, from energy, infrastructure, workforce development, Indigenous relations, and we really need all ministries to be seized with the importance of mining. And I can really see that in the public now. Adrian, you and I were chatting about, when we meet with friends, when we meet with family, everybody knows about mining now. It's a time in our lives where the general public knows about mining, critical minerals. Like previously, when we talked to our friends about it, it'd kind of be in one ear and out the other. But mining is top of mind, and it's very clear that resources and something like mining in the province is huge leverage for the province and Canada when we're talking about trade globally.
I can speak to that. As I was telling you before, I was out for pizza, and yeah, when people heard I was doing a mining podcast, they were all ears, and that was not the case out here 10 years ago. So when you say strategic priority, what does that mean? Does that mean more dollars and cents? Does that mean faster permitting? Like, what does that mean?
Well, I think it'd be a suite of things. And so you might know previously I was in the Ontario government for about 15 years. So I kind of have a sense of what it's like to work in a ministry and work with other ministries. Part of something being declared a strategic priority would be, for me, if, someone from one ministry is calling a manager or somebody else in another ministry, I think it should be very clear that if it's about mining, everyone in those ministries should know that that's a strategic priority for this government. And it should be not side of desk, but top of desk. It might seem like a minor aspect, but because I've been there and know how it operates, I think it's really important that all ministries are kind of given that signal. But for sure, strategic priority also means more investments. It means more investments in the upstream supply chain, which is mining and processing. There's been about $50 billion of investment at the federal and provincial levels in electric vehicles and battery manufacturing, which we've very much seen in the public eye. But there's been very little in that kind of upstream side of things, which is mining and processing. And infrastructure investments is also another key. What I'm hearing from our operations, and this is tied to not only getting mines built, because we need to build more mines, but attracting the people we need to work in those mines. There needs to be energy infrastructure. There needs to be healthcare infrastructure and education infrastructure. When we talk about recruiting families to areas like Kirkland Lake or Red Lake to work in some of our mines that are already operating or up and coming. We need to build the infrastructure and invest in that infrastructure so that we have a whole of government plan to build those mines and attract the people we need. And, we definitely need streamlined permitting. I know this government's been working a lot on the Building More Mines Act and other aspects to get that permitting streamlined. So we definitely support that. And we think there's more work to be done there as well to provide clarity on consultation when working with Indigenous partners.
Okay, excellent. And you mentioned the supply chain. Do you have a sense of how disruptive the tariffs are, or is it too early to tell at this point?
For me, it's a bit too early to tell. It's probably going to be time for another survey soon for our members. But, I've got like a couple of examples that in my mind are key to the trade relationship with the US and where there could be impacts. And nickel's one where, it's top of mind that the US only has one nickel mine in Michigan and they send all that product to Canada for processing. And, a couple years ago, I think it was that the US imported 130,000 tons of nickel and 70% of that was processed in Sudbury. So I think that's a key point to make around nickel as an example. When we're talking about precious metals and gold, that is just such a huge success story in Ontario. We've got 18 gold mines right now and, they're thriving, but we need to keep them strong and robust to ensure that at home, we've got that strong economy, and mining is very much that pillar for Ontario and for Canada to keep the economy going.
It's very interesting that you mention processing because I was quite surprised to see maybe at PDAC, Premier Ford was saying the emphasis on processing, which you don't often hear about. And, oftentimes I get the sense that mining and processing kind of get lumped together and people think, okay, as long as we're digging the ore out of the ground, that's somehow good enough. But as we pointed out here, and as many people have mentioned, if you're just sending it all to China to get processed, what are you really accomplishing at the end of the day? So tell us about processing. I mean, are you seeing developments on the processing side, say in Ontario?
Well, we did hear some good news at PDAC in terms of investments that the federal and provincial government were going to make in Frontier Lithium for their processing required for lithium, which was a huge win. We were all really happy to see that move forward. Lithium, as you might have heard, is important for batteries. So really important that we get lithium projects going in the province and have some support for the processing side of it. I think, Sudbury as an example of our smelters and the importance of nickel processing in the province is key to that relationship and key to us as a trade partner globally. I think in some of your past episodes and probably multiple, Adrian, you've probably touched upon China and Indonesia as examples of just these powerhouses of processing and that being a huge advantage to them. But something to keep in mind, Ontario and Canada are low risk jurisdictions. We uphold safety in the environment and relations with Indigenous partners as a top priority. And we can do the processing here. We can build that supply chain. We can do more. We have to ensure that the smelters in Sudbury have a consistent feed. And we can always do more if we get the right support from government. And that's a holistic approach, not just to more investments, but to much of what we talked about in terms of the permitting and infrastructure investments. And energy pricing and stability is a huge issue for smelters that are, I think energy would be their kind of second highest input cost.
That is a great point. It seems to me the reason why Quebec, say, produces aluminum is because they have, hydroelectric power and they basically have cheap energy. How are energy costs in Ontario? Is it expensive? Is it cheap? Are there strategies to improve? What is the situation over there?
Oh, I think one word to sum it up is it's complex. There are various programs. There's the way pricing is determined in the province is complex. There are programs that require our operations to shut down intermittently. So you can imagine how difficult that is, particularly for smelters, gold refining, any kind of processing, but really any operations. It's really difficult to shut down when you get a quick call from from an energy service provider to say, time to shut down if you want to take advantage of one of our programs, that is quite unstable. I think there's definitely room for better energy pricing. As an example, there's a specific program in the province, the Northern Energy Advantage program. I worked on it when I was in government back in the day, and it's a great program for northern industrials to take advantage of. It gives them a 20-cent rebate on their energy costs. However, that rebate hasn't changed for, I think it's been about 15 years. So something government could do there is index it to inflation, like recognize that that program needs to be modernized. It needs to be extended and continued to provide certainty to the sector. But if the sector's going to be held as a strategic priority, which we're pushing for, but if it's going to be talked about so much publicly, we need to do those kinds of things to support it. And that's a simple way to help support some of those huge input costs that our members are enduring.
That's fascinating. You actually worked on energy in government. I mean, I guess the thought that would cross my mind is, would it make sense on a certain level to say to, if you're going to build a processing plant or process metals in Ontario, to say, you know what, you're actually going to get, I suppose it would be a subsidy, so to speak, but you're going to get a discount, or you're going to get basically a solid, really good rate that maybe is better than the market. Does that make any sense to you, or is that a bad idea?
Oh, I think it makes sense, but there's also ways government can do it in terms of whether it's straight up investment or tax incentives. Like, if you're going to build a processing facility, let's come up with some creative tax ideas to attract you here and to help you build that in the province. I think not only from a processing angle, but many of our companies are bringing in innovations and technologies that they're paying the upfront capital, for example, to go 3 kilometers deep in Sudbury, to keep looking for more nickel and other commodities. Those are billion-dollar projects that, are huge investments. Many of our companies are global. They fight internally for investment. They have to pitch projects globally to secure investment. And so if there's a government environment that is welcoming and providing investment and tax incentives, even better, and that makes them more competitive amongst their own companies.
That sounds like it makes a lot of sense to me. And so as we start to wrap up here, Priya, you mentioned Indigenous communities earlier. How challenging is it, say, these days, if you're trying to start a mining project? People still talk about permitting. How are Indigenous partnerships working out, say, for miners in Ontario, if we can generalize?
I think starting with how it sets us apart in terms of our relationships with Indigenous communities. Indigenous workers make up 12% of Ontario's mining sector. So just to give you a sense, that's 4 times the provincial average if you compare us to other industries. So very integrated into our workforce are members of Indigenous communities. Right now, there's over 140 active agreements in the province with Indigenous communities. So that covers things like impact benefit agreements, exploration agreements, and resource revenue sharing with government, which are just huge pillars of the genuine partnership and relationships that we need to have with Indigenous communities. There's some great examples in our economic report of some of our member companies that are working closely with Indigenous communities, building a new lake to offset some of the damage that was potentially done to fish, and inviting local Indigenous communities to join them in the development of that and the naming of that. A lot of our member communities are working very closely with Indigenous communities to build out youth programs and training programs and recruitment programs. A lot of work at career fairs is done to attract Indigenous communities. But at the end of the day, mining is a very Ontario historic priority sector, but it hasn't gotten to where it is without those genuine partnerships with Indigenous communities.
Okay, excellent. And just last couple of questions here. What are the biggest challenges that, say, miners are facing, or that the industry as a whole is facing in Ontario right now? Like, what are the biggest concerns?
I know top of mind aside from tariffs and all that that's taking up our mind these days, workforce is a huge issue. Hearing it from all of our members, we've actually got a public awareness campaign that we've had for a few years, and we continue to promote around attracting youth to the mining workforce. Our report highlighted that 21% of our workforce is over the age of 55. So that's an eye opener. And it's a bit of a wake up call that we need to do many things to get that pipeline of talent into place. And that's anywhere from curriculum modernization and awareness campaigns and some of that infrastructure investment I talked about to attract families to mining areas in the province. But aside from workforce, I would say energy is always a challenge in terms of some of that better pricing and that long-term certainty and stability and the problematic shutdowns and more investments in technology and energy efficient technology. And there are ways to strengthen that, as we've kind of discussed, but those are kind of some of our main challenges.
Okay, excellent. And just finally, back to the tariffs. I mean, you mentioned uncertainties that people are facing. I mean, what kind of uncertainties does a tariff produce, say, for miners or for the industry? What does that mean for the industry on a kind of day-to-day level?
Well, to me, I kind of think about, if I'm in a mine, I've been working in a mine for years, that's my career. The amount of investment that goes into a miner, whether it's to support them in their role from a safety perspective or the tools and equipment that are required for them to do their job appropriately, that is a ton of investment in one human. And mining companies are known to invest in their workers. Workers are the top priority and safety is a top priority. That all comes with costs. So I think from an uncertainty perspective, there's always the potential for costs going up. That means things have to change if costs are going up. It could be in a negative way. Of course, there are always the potential for job losses down the road. We're not seeing that. But when there is uncertainty, those are definitely the fears that we have. We're seeing it in other sectors. We're seeing shutdowns or pauses given the uncertainty or given the tariffs that have already been in place. And, that's what we're hoping that the mining sector can come through, and Ontario's mining sector can be seen as a real pillar from a trade perspective and just from an economic perspective for the province.
Priya Tandon, president of the Ontario Mining Association, thank you for joining us and sharing everything you're working on at the OMA.
Thanks, Adrian. It was a pleasure.
Thank you once again to Orania Resources for sponsoring this week's episode of the Northern Miner Podcast, and thank you to Priya Tandon for a fascinating interview on what is happening at the Ontario Mining Association, and thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.